Hello. With Donald Trump set to announce new tariffs on April the 2nd, markets are already reacting, driving volatility across key assets as we approach so-called Liberation Day. Joining us now, David Scupp from StoneX to break it all down. Great to see you, sir.
Great to be back here, mate.
Are you excited about Liberation Day?
Look, if I'm being honest, I'm excited about having some of that uncertainty resolved. So I'm looking forward to actually hearing exactly what figures we're talking about, whether it's carte blanche across all nations, whether it's going to be individualised, just to go and get some clarity, because from a price maker's perspective and from trying to go and get directional risk right, until that's resolved, it's going to be very difficult.
Let's talk about what happened on the ASX yesterday, Asia markets as well, Europe too. It's been a pretty difficult 24 hours for investors to predict what could happen this week.
Yes, it's been an interesting time because not only do we have end of quarter, but of course we saw that big sell-off on Wall Street on Friday and some pretty ugly declines coming through on the local market, but even more so in Japan. It was the end of the financial year in Japan yesterday, and the Nikkei off 4%. We were down around about 1%, which is nothing to go and scoff at. But of course, then we've seen a big rebound on Wall Street overnight. How much of that is actually driven by fundamental factors or just simply because it was quarter end? I'm probably favouring the latter at this point in time.
Why is that?
Look, the price action itself, if it was just isolated, would be incredibly bullish. But nothing has changed from the macro environment. We still have no certainty about tariffs. We have lots of speculation out there. And we still have this uneasy concern out there about what it's actually doing to the US economy. The sell-off that we saw on Friday was entirely due not to do with tariffs, but the fact that maybe the US consumer is really starting to go and slow down. So to me, that's nowhere an area that hasn't been resolved. So I look at the price action overnight and go, quarter end.
Yeah, well, as you say, Wall Street rebounded, and we know that equity markets are waiting and watching. Let's have a listen to the White House Press Secretary Caroline Leavitt.
On Wednesday, it will be Liberation Day in America, as President Trump has so proudly dubbed it. The cabinet will be here for the event. It'll be our first Rose Garden event of this administration. So you all will be invited to attend and cover this historic moment. The president will be announcing a tariff plan that will roll back the unfair trade practices that have been ripping off our country for decades. He's doing this in the best interest of the American worker.
All right, the American worker. Now, it's been really interesting watching that and Caroline Leavitt there, and also just Trump's love of tariffs. As he said, he believes it's the most beautiful word in the dictionary. He also is a big lover of Ronald Reagan and Margaret Thatcher, and they did not believe tariffs were the most beautiful word in the dictionary. What has happened between the 1980s and 2020s to get to a point where a Conservative administration will be looking at winding back what was meant to be the free market?
Mate, that's a question you can go and answer yourself. It is incredibly difficult. I don't think anyone really knows the answer. There's been a lot of benefits that have come from this, but clearly the Trump administration, Donald Trump himself, doesn't think that the world and the United States have benefited from what we've seen from globalization over recent decades. Look, what we're going to give Trump still a benefit of the doubt is that he's looking to go and try and use revenues generated from tariffs to go and alleviate some of the pain for households and consumers by cutting income taxes and taxes on tips and the like. So we haven't seen that phase yet. But what happens in between? And that's where the big concern is, particularly as we enter the second quarter of the year. So much uncertainty, so much has been front-loaded in terms of anticipation of these tariffs. Businesses have gone and brought forward a lot of orders. What happens now that we're here? Because if we just have this big pothole, then it could get really nasty for the US economy, and that means really nasty for the global economy as well.
As we know, times like this, and right now there is just so much uncertainty, right? But gold hitting new highs as well. How much of this do you think is because of safe haven versus speculation?
I think it's a number of factors. Safe haven is one of the factors behind it. Quarter end, again, a big factor. We're seeing gold has really outperformed in the first quarter of the year. So there's a natural encouragement to go and try and have it on the portfolio books at the end of that quarter. And then don't discount technicals as well. If you go and zoom out on like a weekly chart or a monthly chart of gold, it just explains so much of what's going on right now. There is so much upward momentum there. And that's just encouraging people who were skeptics originally to come off the sidelines. So look, people are talking about already 3,130 struck overnight. We're talking about 3,300, 3,500. Look, it's not going to go there in a straight line, but at the moment, all the signals are pointing to upside from here.
Let's talk about the RBA meeting. What do you think we should expect from the central bank, and how could it impact the election? Surely they can't make a move.
Look, it'd be very, very surprising to go and see any rate cuts. So the cash rate likely to go and move at 4.1% today. Where the interest will be in the statement and then also in the press conference from Michelle Bullock afterwards, an hour after. Because that's where the RBA, if they are likely to go and signal a rate cut, will be in those particular documents and at that event. So it's not going to be so much about the cash rate. It's going to be about what do they signal. And I think they might go and say something along the lines that if progress and in achieving those inflation goals that they have continues over the next month, they may be in a position to go and ease. I think there'll be something along those lines that we'll see in the statement. Of course, Michelle Bullock has pushed back a lot against market pricing. We have nearly 3 cuts priced into the curve right now. Whether she chooses to push back against that, look, it's probably likely, but I think where it's going to land here is that they're going to set the scene for a potential rate cut coming through in May.
Do you really think so? I mean, obviously, looking at what Michelle Bullock said after the last cut, it was basically, you're getting this one, we didn't really want to give it to you. We wanted to get the pressure off us, otherwise people are going to come out with the knives during this election campaign as well. But also the huge amount of spending that we have seen, particularly from the Prime Minister over the past week, that would be worrying the Reserve Bank about inflation, surely.
On an aggregate demand basis, public spending is clearly still one of the other top of the list concerns that they have out there. But when you look back over time, and it's not because the RBA is looking at history and says we've got to do the same pattern, but when they go and ease interest rates, it's incredibly rare that we'll just get one single move. They're like cockroach theory. When there's one, there's multiple. And even if they do cut and say bring the other cash rate down to 3.85%, it would still be in relatively restricted territory. Not a lot, but it would be enough to go and maybe dampen some of those concerns that we could go and see an increase coming through in unemployment at some point in time. That's going to be the real key litmus test. If we see unemployment start to go and move really higher, the RBA has made it really clear throughout this cycle and even into the prior cycle that it wants to try and protect gains in the labour market, and it will do so by cutting rates. That, to me, comes across as a much more important factor for them right now than it is the inflation rate.
And David, just finally, talk to us about some of the major risks that traders should be watching this weekend. Does the biggest risk live at 1600 Pennsylvania Avenue?
Well, that's obviously a big one. Liberation Day is going to get a lot of the headlines, but I'll come back to what we were talking about earlier when it comes to those concerns about the US economy. And we have non-farm payrolls on Friday, Friday evening our time. And if we get a whiff that some of this weakness, some of this uncertainty is now spilling over into the labour market and sending the unemployment rate higher there, that's where it could get really, really ugly, because it's a lagging indicator. Market concerns are already bound there about what's going on with this tariff uncertainty. If that actually comes to fruition, we could see a big sell-off, more than what we saw last Friday on Wall Street. And that, to me, is going to be that key risk event to watch that we know about. Before that, we also get a lot of other data out, some ISM services and manufacturing PMIs that give us a snapshot of what businesses are seeing. And we also get other labour market data. So keep a close eye on that. It's going to be very, very important this week.
Hold on to your hats, folks. It's going to be a rocky week. David Scott, always appreciate your time. Thank you.
Always great to be here. Take care.